When Palantir reported earnings last month, the stock jumped over 20%. That rally continued and the stock is now up 129% year to date. That means the company is now valued at $31 billion. With $2.9 billion of cash and investments and zero long-term debt, the enterprise value is $28.2 billion. Palantir's rally can be explained by three main factors: continuing top-line revenue growth, another quarter of profitability, and excitement for its generative AI platform. Revenue in Q1 increased 18% to $525 million, taking the total over the last 12 months to $2 billion, and net income was positive for the second quarter in a row. But you can see that net income over the last 12 months is still negative at minus $250 million. With a quarter of all expenses being paid in stock-based compensation, but the company does have positive free cash flow to the tune of $346 million. Growth at Palantir is still impressive, with average revenue growth of 37% over the last few years, and the company appears to be winning new contracts on a regular basis. But the revenue growth rate does seem to be declining, and this is still an expensive stock, trading at 14 times revenue and almost 82 times free cash flow. In addition, stock-based compensation remains significant. Back in December 2020, there were 1.8 billion shares outstanding. At the end of March 2023, that number had risen above 2.1 billion. A bear report last week claimed that Palantir is more of a consulting firm than a software company. It claimed Palantir invested in a number of SPACs on the basis that they would then purchase Palantir's software. It seems that Palantir offers founders generous exit strategies so it can acquire companies and convert them to Palantir's products. The bear report also alleged a history of employee dissatisfaction and a toxic work environment. All that said, this information has been known for a long time and it's not had any effect on Palantir's stock. Palantir clearly has a well-regarded product as it's been awarded multiple contracts with US and UK governments. Just this week, the company announced a new $463 million deal to put AI into the US military, as well as a deal with Amazon's AWS. Such large deals no doubt require some level of human input, and that adds to evidence that Palantir at least has some consulting elements. And that raises a key question over valuation. At 14 times revenue and 81 times free cash flow, the stock is valued more like a hyper-growth software business than a consulting firm. If it truly is a consulting firm, then those multiples need to come down. I gave Palantir a bullish score of 4 when the stock traded around $9 a share. Now that the stock has almost doubled, I think there's a need for caution, which is why I now give it a neutral rating. But these are my personal opinions, not financial advice, and I've got no position in Palantir stock.